another webinar Wednesday. Today we have a special guest from one of the entities within the DIFC, Nasdaq Dubai, who are supporting and has been supporting the ecosystem of the financial services sector for the longest time. And today we will be able to highlight their support for the startups and the SME sector moving forward. My guest today is Tahir Mahmood. He's the head of business development of Nasdaq Dubai, overseeing all products including equities, equity futures, sukuk, bonds, and murabaha. His role revolves around creating new relationships with key stakeholders such as issuers, regulators, lawyers, and bankers to help the exchange grow. Tahir works with the team to bring new listings to the exchange, as well as offer new products to the market. A key element of his work is to coordinate with the regulator and law firms to ensure correct regulatory frameworks are in place. Tahir has had a key role in making Dubai the leading sukuk listing venue globally by coordinating with issuers, regulators, lawyers, and bankers. Tahir joined Nasdaq Dubai in July 2013 and has spent most of his career working within the Islamic finance arena in London, Bahrain, Qatar, and now in Dubai. He has assisted commodity brokerage houses to establish operations in both London and Bahrain, specializing in Sharia-compliant commodity-based financial products. Most recently, Tahir oversaw the Islamic finance division of the Bahrain Financial Exchange, as well as helped to market all of the exchange products. Tahir holds a Bachelor in Business Computing from City University, London, and is member of the World Business Angels Investments Forum. Welcome to our session, Tahir, and thank you for your time.
Thank you, Raja. It's a pleasure to join you.
Before we start, I would like to let everyone know that we would like to share with you a lot of the developments that are happening in the region with regards to the SME ecosystem. However, we would also like to hear from you. If you have any recommendations with regards to developing the SME ecosystem, feel free to drop us a note in the chat box. We will collect all of your feedback and we will look into how can we integrate those ideas within our current engagement. And please, if you have any questions, make sure that you write them in the Q&A box. We will look at them towards the end of the conversation, and we will be more than happy to address them. So Tahir, looking at the importance of building a startup ecosystem globally, regionally, and here in the UAE, why is it important from your perspective?
Okay, thank you, Raja. Well, look, startups are extremely important for any economy because great businesses have to start from somewhere, right? So the likes of Amazon, Google, Apple, and many of the leading companies we have globally today were all startups at one point or another, and a lot of which probably started in garages. If you don't have the right ecosystem in place for startups, it's very difficult to attract entrepreneurs and create a higher success rate. When we talk about ecosystem, it's not just a desk in an accelerator or incubator that you have access to. It's actually support starting from the accelerator to market participants, the financial system, and even to a government level. And obviously, you know, Raja, you know better than I do as a accelerator how an ecosystem is built and what the support there is. And when you look at statistics, there's a lot of statistics online if you look at failure rates of startups. But you know, one report I came across was showing that 90% of startups fail you know, at some point or another. 20% do so within the first year, and that's quite a significant number. And also less than 50% of businesses make it to their 5th year, which kind of shows you how important it is to have the right ecosystem in place within a city, within a financial center, within a country, to support those startups, to ensure that you reduce the failure rate. And also to help startups grow faster. That's one key role of an ecosystem. For Nasdaq Dubai, we became a partner of FinTech Hive, not with the intention of listing the startups that are with you as an exchange, which of course is something we'd love to do, but to support the growth of these companies and educate them on the capital markets, because I'm sure a lot of these companies at some point or another will reach out to an exchange like ourselves to want to raise funding through the public capital markets. So essentially, the more startups we have today, the more companies can grow to list on exchanges like ourselves. So this is why, for us, having the right ecosystem is extremely important. And then look, you know, with your experience, Raja, I've been seeing more and more entrepreneurs coming to the region to capitalize on untapped opportunities here. Given that you've been at the heart of the development of the startup ecosystem, maybe you can highlight how the landscape has changed in the region, and probably specifically here in Dubai as the leader in attracting entrepreneurs, and DIFC with the ecosystem DIFC has built.
Absolutely. So the UAE has been leading the region in regards to the innovation agenda overall, and the DIFC has been leading the innovation in the financial services sector in particular. The development and building the ecosystem included looking at attracting tech companies to consider the market that we are operating in, engaging with financial institutions, creating collaboration opportunities with these financial institutions who understand that technology is here to stay and it is the way and the path to the future. Creation of collaborative co-working spaces that can accommodate these talents. Innovative startup commercial and regulatory licenses that has been issued by the DIFC, whether it's the innovation testing license, whether it's the innovation license or the FinTech license. You can find a wide range of regulations and licenses in the DIFC today that accommodate most of these innovations and enable them to access and grow in the region. Access to business opportunities and access to funding through the DIFC FinTech Fund or the VCs and funds that are based in the region or in partnership with the DIFC. And obviously access to a greater community will definitely support the ecosystem. Developing talent as well. Talent is very important in growing these technologies and also retaining these talents in the region. And today with tech being available through regardless of where you are, I think it enables all of these talents to engage with technology and contribute to solutions and products and take them to market.
Okay, good. And look, being here in DIFC, DIFC is ranked 8th as when it comes to the global financial centers around the world. And one of the key things is what DIFC has built around it. Now, how do you govern these technologies that startups are bringing in and protect the interests of investors and consumers?
If you look back at 2004, when the DIFC was first launched under the direction and vision of His Highness Sheikh Mohammed bin Rashid, he wanted to create an international recognized environment for corporates to come and operate here. And the same has been developed and progressed even for the startups. And this is why we find the support from the legal and regulatory framework in the DIFC, whether it's the DIFC courts or the DFSA, who are continuously working on developing regulations for FinTech, because at the end of the day, you have the responsibility of protecting the investors who are investing into the growth of these companies, and also the responsibility of protecting the consumers by making sure that all of the services provided to them are governed through the regulators. And we work very closely with the regulators. They're part of all of our activities. In addition, they have their own programs and activities to attract technology innovation, and they work very closely with these startups to understand the technology and find a way to regulate them and support them in that regards.
Okay, and look, DIFC's got their sandbox as well, so that it gives ability for some of these fintechs to come in there and see how regulations can support them. And I think one of the important points I want to make here is the fact that people sometimes think regulations are there to go against them. Regulations are there to protect. Right, and I know for sure a lot of discussions I've had with startups that say regulations are making it difficult for us, but we always have to remember that when it comes to regulations, regulations are there to protect investors, like you said, consumers, but even the company and the company's employees as well, which is something very important. And then look, you've got, I want to sort of talk about the current challenging times, right? It's no webinar is a webinar unless you talk about what we're going through at the moment. And fintech's been really important topic when it comes to such challenging times. But how can corporates and financial institutions embrace the power of fintech during the current challenging times?
Remember that digital is driving adoption in these challenging times, and all companies need to keep their businesses running and in time where people are distant themselves physically. Technology and the non-physical digital world is what will ensure continuity of interactions. So we continue to support the institutions to engage in those innovation opportunities, whether, and you know, some people would think that it's challenging now because of COVID. Honestly, we think it's much easier because we can tap into a wider pool of resources today from the comfort of our own offices. And we have seen great engagement, although our program this year is virtually. We miss the physical interaction. However, it has been running so well so far, and I think the technology has enabled us to save so much time and maybe be more efficient and productive in that regard. However, we continue to see the same engagement, excitement, and support from the financial institutions as the previous years, and we see deeper focus, if you would say, from where we started to where we are today.
Okay, so it is beneficial for, you know, the digital economy, if we can say, fintech companies, but there are still challenges, right? So what are the challenges and obstacles faced by fintech sector here in the Middle East?
So for startups in general, access to funding has been always a challenge. However, we have seen that over the last 3 years, and with the support of government entities and others, we have been able to bridge that gap. The DIFC launched its dedicated fintech fund to invest in fintech. We have about 20 partners from VCs and funds that are focused on fintech, and they continue to invest in fintech. So funding is one, and then the second one is the regulation. We do have regulations, but we want many more regulations, because the more you work with technology, the more you find out the opportunities to even grow further, specifically in the B2C segment. So B2B is being regulated more than the B2C. However, as soon as these regulations start to come to the market, we will be able to see more solutions evolve. And also for the financial institutions, one of the biggest challenges for them is building fintech platforms that are truly differentiated in the back end and not just the front end. So you don't want to just build an interface and put it out there. You really want to build that efficiency throughout that process and translate that innovation in reduction of resources, efficiency, and profitability for these institutions. I think going back to the funding point, and I think this is where I need your input, Tahir. If we look at startup funding, could you elaborate on the benefits and struggles within startup funding? And I'm sure with you and being with Nasdaq and also part of the startup sector, you have a personal and institutional experience with this topic.
Yeah, no, definitely. Look, funding is extremely important to support the growth of a startup and its success. And actually, for any company, whether it's a startup or it's established, what's the benefit of funding? Essentially, the more cash you have in the bank, the more resources you can bring on, which means you can move faster. And speed is always very important when it comes to startups, because you've got an idea. How quickly can we launch that idea? That's what an entrepreneur is thinking about. And a lot of the time it's a matter of the more hands you have working towards that idea, the quicker you can launch. I read that 82% of businesses fail because of cash flow problems. Now, that doesn't necessarily mean there was no funding available. It could also be because poor cash management was there by the company. But funding, as you said, you know, there's always a struggle when it comes to funding. If you look at the funding cycle, entrepreneurs will start with their own savings that they've put together. They'll then move to friends and family. You've then got angel investors, venture capital firms. As you grow, you'll start speaking to private equity firms, and then at some point you'll be looking at IPO, and we'll talk about, you know, how we're looking at changing this sort of cycle. We're also seeing specialized funds for startups too, and Raja, I believe you have one in the DIFC, and then something else which never gets mentioned often is funding from banks as well, in that funding cycle. Now, one of the struggles I hear a lot from startups is finding that funding. The early stage funding ecosystem is still very young here in the region. There aren't many angel investors, and you know, I look at angel investors through my association with WBF quite a lot. And when you compare to the amount of angel investors and angel networks there are in the region, it's very small compared to other regions. We definitely need more VCs and private equity funds. We do have good investors here who are very keen on supporting startups and young companies to grow. But I still think we need much more VCs and private equity firms coming in and supporting the growth of these companies. But at the same time, I've seen pitches from startups, and believe me, a lot of entrepreneurs either pitch incorrectly, or they're just not realistic enough in what they're asking for. So I think education there is required as well, when it comes to entrepreneur or a startup going out and wanting to speak to investors. And one of the things to remember is that each time you go to ask for funding, you're potentially diluting your equity share in the business, which is where planning is extremely important. As an entrepreneur, you need to have a very clear funding plan, or know how much money you will need and when you will actually need that money. You don't want to go and raise too much today and actually not utilize that money for 3 or 4 years. Or what you don't want to do is go and raise money today, and then in 6 months' time, you actually need to go raise more money. You've really got to plan that requirement when it comes to needing funding, but also ensure you do have a safety net for any surprises as well. And that's something which some companies fail on, having enough money to run the business, but if there's a surprise, not having that backup money sitting there.
Absolutely. And Tahir, last week, His Highness Sheikh Hamdan bin Mohammed launched the Nasdaq Dubai Growth Market to support young businesses and SMEs, where he emphasized that it is one of the pillars of our economy. Dubai seeks to open new opportunities for entrepreneurs to help them expand, attract investors, and finance their projects. The growth market is a new landmark initiative designed for young businesses and SMEs to help reach their full potential, achieve global visibility, and raise capital. Now, I posted about this on LinkedIn, and it was one of the most engaged topics because startups really care about that. It's important to understand what does it offer to these startups and how can it enable them tap into the bigger finance market. So can you tell us more about the initiative and what is the opportunity for our startups to benefit from it?
Okay. No, definitely, and thank you. You've got a great network on LinkedIn, so I think we need to ask you to promote a lot of the things that Nasdaq Dubai does. So thank you for that. No, it's very exciting initiative announced by His Highness, which we've been working on, and it's all about inclusion. When you're in a region that is made up of a very large number of SMEs and young companies, we want to give these companies access to the public capital markets. I spoke about the importance of funding to help the growth of a company and the challenges they face. We wanted to open up the capital markets for smaller and younger companies. There's always been this misconception where to IPO, you need to be a very large company. You need to have a very large balance sheet. You need to have huge profits. You need to be, in different markets. But that is a misconception, and that's something we wanted to change. And although we've had our main market, and there haven't been any restrictions for smaller companies to list on there, one of the major sort of hurdles we saw when it came to companies listed, smaller companies listed on the main market, was the cost. Because when you're going out and raising money, you're always going to be looking at the cost of funding. And I mentioned the different parties that you can go for funding, and I mentioned IPO at the end of that list. What we've wanted to do with the growth market is actually give younger companies, SMEs, the opportunity to access the IPO at a much earlier stage than they would have envisaged. And that's what the whole purpose of the growth market is. So what we've done with the growth market is, one, is made it easier for companies to be able to go public. We've set it up in a way where we've introduced, DIFC has introduced compliance advisors. So looking at ways of reducing the cost of doing an IPO. We're also allowing younger companies. So where on our main market you need a three-year track record, on the growth market you only need 1 year track record. Now, when we talk about startups, people automatically think, okay, startup, they've just got their license, they've only been operating for 3 or 6 months. But sometimes a startup can be operating for 1.5 years or 2 years. And look, being young at that stage, what we wanted to do was give such young companies the ability to actually go public at the early stage of their growth. But one of the things we've ensured is, one is we're still ensuring, as we have on the main market, that the founders and current shareholders keep control. So you only need to offer 25% of shares to the public. And we're also, the way DFC have set up the requirements and the regulations, we're also ensuring that it's quality companies, and the transparency is there and the disclosures are there. So we are targeting quality companies that have a good story. Now, when you look at an IPO, a lot of people think IPO is only to raise money. That isn't true. Yes, an IPO is a means to raise money, but it's also about the credibility and the brand awareness that it brings. And I think for the younger companies, for the SMEs, this is very important for them to consider. Yes, they're looking for money, and IPO will bring them money, but you also need to focus on the credibility and the brand awareness and use an IPO to really grow the business. And this is what we're doing. We're looking for companies that have a fantastic business plan. They've got a great future ahead of them, and we want to bring them onto the exchange and give investors, the public, access to these businesses to support their growth. And one of the important requirements which we haven't placed is profitability. We don't ask for a certain level of profit to go an IPO. Of course, there's always going to be questions raised by investors around what a company has been doing, but remember, investors care about what you're going to be doing going forward. They do want to look at what you've done up to now, but what is important to them is, if they put money into your business, how are you going to grow that money for them? And that's where it's very important for you to have the right story and have the right business plan going forward. So essentially, the purpose of the growth market is to allow a company at any stage of their life to be able to go and access the public capital markets.
And it also gives a good opportunity for an exit for any investor as well, because one of the concerns of investing or raising funds today is the limited exit options.
It is, and look, and whenever you go out and speak to private equity firms, they'll be asking about exit. But one of the important things here, what we've done, Raja, with the growth market, which we don't have with the main market, is we've introduced a 1-year lock-in period for all pre-IPO or investors. So whether that's the founders, whether that's institutional investors, VCs, private equity firms, what we're saying is these shareholders need to remain as shareholders for at least 1 year post IPO. Why have we done that? Is because it gives comfort to new investors that the people behind the business will remain vested into the business. And that's very important for new investors coming along as well. So the exit opportunity is there for existing shareholders after 1 year of being listed.
So when can we list our companies? Sorry, the question is.
You can list the companies now. So look, the announcement is saying we're launching. What we're doing, we're speaking to a number of companies right now. We've been speaking to companies for some time. So the DIFC issued the regulations in April this year. We started working with a number of partners here in DIFC and in Dubai to support us. And these are the compliance advisors or boutique advisory firms, some of the banks here, lawyers, auditors. So we've been working with them to ensure they're on board, they're fully aware, and they support us in the growth market. We've been speaking to companies, and some companies have already engaged with advisors to start that process. And following the announcement, we've had a lot of interest, and we're hoping to see a lot of, inshallah, a lot of IPOs once we launch. So anyone that's interested, we're ready to engage, and the market is such that they're at a position where they can start the process should they wish to list.
I can't wait for one of my FinTech Hive companies to list. That will be a great milestone. So, Tahir, maybe if we go through a journey of a startup, what are the key elements an entrepreneur should know about an early stage for the end goal of an IPO? So they won't just go and list. There are certain steps that they need to consider from the very beginning of their journey with the vision of having an IPO. Can you take us through that journey?
Oh, definitely. Look, I always say to entrepreneurs, always have that goal of IPO in the back of your mind. And believe me, a lot of them don't. A lot of them are thinking, we have an idea, we need to launch the product. Once they launch the product, they think, okay, we need to get more customers. Oh, we need money now. How should we go raise money? Let's look at VCs. Then if they come to another stage and think, okay, we need more money. What shall we do? Let's go to private equity. And the minute you go to the private equity, as we spoke, they'll say, what will be our exit strategy? Now, as an entrepreneur, if you're thinking about that exit strategy as an IPO from day one, what you also need to do is you need to start preparing for the exit strategy as well. And there are ways in which you can do that, because preparation is crucial from an early stage. One is to have that goal, set that goal of IPO from day one. And that's something that your investors will like as well. When it comes to what can you do from a perspective of preparation, essentially is following best practices. Now, what's the difference between a listed company and a private company? Yes, transparency is one, and where a listed company discloses everything to the public. But there are other key changes. One of the important ones is financials. An entrepreneur should think about preparing proper financials and have those financials audited from the first year. Don't wait until you progress further and you're at that point of you're speaking to VCs or private equity firms. Have it ready from day one. You'll be surprised the number of companies we meet and they say we're interested in IPO, and when we start asking them about preparation, they haven't even got audited financials, and these are companies that have been established for 7-10 years. So that's something you can do. The other one is corporate governance. Corporate governance is extremely important, and that's where when it comes to preparation, not just for an IPO, but even when you're going out and doing that capital raise, institutional capital raise, having good corporate governance practices in place is something which investors really like to see there, and that is a board of directors. Look at having independent directors on there, have certain policies, procedures in there, have controls in the business, looking at your IT systems, IPs. These are all very important things. So start learning about corporate governance and the best practices at very early stage. And then the final thing is investor relations. You'll be surprised that there are companies out there, around the world, who even after listing, they still are not following the best practices when it comes to investor relations. And this is something, if you start learning at an early stage, what is investor relations, what's the difference between IR and public relations, and start implementing key investor relations practices, believe me, it will really help you when it comes to going out and speaking to investors. So these are some of the key sort of practices you can start putting in place from day one. But the key is IPO, and understand what it means to actually go an IPO and what you need to do, how you need to be ready to IPO.
Absolutely.
Good. So look, that's on that perspective. Now, if we sort of come back to DIFC and look at what DIFC has been doing, what's the role of DIFC in leading the development of the fintech space in the region?
So DIFC is already leading the whole region with regards to financial services, and the future of finance is our priority moving forward. We have several programs to support entrepreneurs who are launching and scaling fintech ventures. The programs range from supporting of early stage companies, growth stage, scale up startups, and give them access to market, investors, an ecosystem that support growth. We have also dedicated a portion of the recently opened Gate Avenue on Zone D, the first floor, is all dedicated for tech startups. So that's where the Gate Avenue, the DIFC FinTech Hive office is, and we have the Innovation Hub and the Innovation Hive, and we have some more tech companies operate within the same place because we want to grow and support this community. And then, as I mentioned, the innovative licenses that are put in place for innovation, for fintech, for regulatory requirements, and the collaborative co-working spaces. The DIFC FinTech Hive is especially passionate about developing talent within finance and technology in specific, with a focus on female talent participation in the fintech sector. And for that, we run a program called Accelerate Her to include more women in the financial services sector and also in the innovation industry. I would like also to give a couple of success stories from the FinTech Hive to the audience, and hopefully we'll see some of them listing on Nasdaq Dubai. We're very proud of our companies, and to mention a few of them, Sarwa, for example, joined the accelerator back in 2017, MVP, 2 partners who came up with an MVP and wanted to launch a robo-advisory in the region. And they came here to the DIFC in 2017 when we really were at the very beginning of the journey. The regulator supported them, the DIFC supported them, and today they are operating with about 3,000 customers in the region, enabling them access investment opportunities starting from $500 per person. Norblock is a company from Sweden who does the KYC on the blockchain. They were part of our 2017 program as well. And today they are already in business in the UAE with at least 5 banks and 2 government entities, including the DIFC, to enable the KYC process. Wahed Invest is an online halal investment platform that's listed on Nasdaq in New York. And they have a representative office here. So that's another story that connects the whole globe. And also we have Capital, a Sukuk capital market solution that has also came through one of our programs and registered with us and currently piloting, taking their products to market.
Okay.
We have few minutes left, Tahir, if you don't mind. We have some questions from the audience. Maybe we take these. First, we have a question from Suleiman Al-Harthi. What would you recommend for startups from Oman that would like to tap into the UAE market? Thank you, Suleiman, for your question. Definitely, Omani startups are more than welcome to join the UAE market. I think it's a great launch pad for other markets in the region. We've seen a lot of companies from Kuwait, Bahrain, and Saudi join our program and then scale within their own countries because we have an ecosystem that enables them to understand the potential and the opportunity. So we'll be more than happy to have one from Oman join our program. Then we have a question for you, Tahir, from Khalid Shamsi. He's saying, will you be considering and or promoting for SPAC, special purpose acquisition companies that have recently seen big growth in North America and Europe? SPAC overcome of the challenge listing or IPO startups and allow retail to buy in shares that are traded on the exchange.
Yeah, so look, SPACs have been there for quite some time, but recently they've been a lot more prominent. We're seeing a lot more SPACs, and for those in the audience who aren't aware of SPACs are essentially a empty shell company. So it's someone like Raja saying, I want to raise money and I want to use that money to go and acquire businesses. She hasn't identified what businesses to acquire, but what she's saying is, for me to raise money, I want to create a company, an empty company, list that on the exchange, and through that listing, raise, let's say, $100 million, and then use that $100 million to go and invest in FinTech companies, right? For example, because her expertise is in FinTech. Now, as investors, for you to invest in the SPAC Raja has created, you're essentially investing in the experience and the success of Raja as an individual, or her and the team that she has. So that, when you look at SPAC, that is sort of the purpose of SPACs, for you to be able to raise money before you go and buy these companies out. And it's becoming a lot more popular in the US, especially this year. We've seen a lot of them. But there are, certain criteria for SPACs. Not everyone can go do it. There's things in there which protect investors, allows investors to step out before acquisitions. It is a way for a company to go and be listed, is look at as a reverse merger, but at the same time, is question, would that company be getting the right value compared to if that company went out and did the IPO themselves? Because obviously for Raja to be going out and raising money, her purpose is, I want to acquire FinTech companies at a discount. So then the question for that FinTech company is, do I sell to Raja and her SPAC at a discount, or do I go and do my own IPO? Yes, go through the process of doing an IPO, but get a much better valuation. So SPACs have their benefits and they have their drawbacks as well from a company's perspective. It's something which, for us as exchanges, as Nasdaq Dubai, and we're always looking at the various developments around the world. We're always looking at what we can and can't do. If we did decide and the DFC decided to go forward and allow SPACs, we'll definitely let the market know and give that opportunity for individuals and corporates to create SPACs.
We have another question from Ghulam Amarsi. The startup ecosystem is driven by the public sector in Dubai. Is there a better model to adopt in the post-COVID era in which the public sector plays its role as an enabler and forward-thinking regulator, and let the private sector play the bigger role? Portugal or Ireland have established interesting models. Dubai has the infrastructure to become a hotspot for startups, but it needs to make the business model more attractive for entrepreneurs and investors. What do you think, Tahir?
So look, I think Dubai's created a great infrastructure and a hub for the region. And it's just a matter of developing there. And this is where different market participants need to come together and work together to support that and create different different models. And there are changes. Raja spoke about the innovation license. There have been various other changes, and there are changes that are coming from DIFC, FinTech, Hive. Our change that we've done is the growth market to allow younger companies access to investors. So there are changes coming in different aspects. It's just a matter of how quickly we can roll out these changes.
I agree with you, Tahir, and I think also that the UAE in general is playing a proactive role and is open for public-private partnership. We work with a lot of private institutions to enable innovation, and I think it's interesting to go into a country where the regulators hand-holding the innovation and not blocking it like in other worlds. But as I mentioned to our audience, if anyone has any recommendations or ideas that think could enable us enhance and improve this ecosystem, we're more than happy to receive your recommendation. We have another question from Rahul Das. He says, we see that brand awareness is a problem faced by startups. What is your advice to those who face the issue?
Okay, so look, one thing I've definitely been seeing, Rahul, is the fact that entrepreneurs are great at what they're doing, and especially when you have tech people, right? They're IT related. They go, they develop, they bring ideas, but they kind of don't have the experience when it comes to marketing, brand awareness, business development. I've also seen and had discussions with entrepreneurs who have graduated and they haven't gone and worked. And what they've done is all of a sudden come up with this idea and they've gone in to develop that idea. So experience plays an important role here. Whether you've had the experience when it comes to marketing, brand awareness, working in a corporate environment or not, where you haven't had that experience, I think the key is get that support that you need when it comes to brand awareness. And then look, this is where ecosystems like FinTech Hive have brought on partners and then various different partners from here in the country who can support certain businesses. So look at support like that. When I say bring the experts in, doesn't mean you point a PR agency to assist you with brand awareness. So it's a matter of sometimes entrepreneurs are just so focused on creating that solution and going to market that they forget about various other things such as marketing, the brand, business development. So it's making sure you're on top of everything and bring things like marketing into play at an early stage.
This morning I was watching the brief on the US elections, and they've mentioned how much each campaign has spent on digital marketing. So between Trump and Biden, there is $1.7 billion that was spent on digital marketing on all digital platforms. And that's fascinating. And it's the first time in history because the consumers have shifted. And if you want to talk to them, or regardless of whatever you're developing, if they don't know about it, they will never use it and they will never be on that platform. So developing the brand awareness is as important as developing the value proposition or the solution that you're working on.
And look, now that a lot of brand awareness is happening digitally, it's not as expensive as it used to be, right? Back 10, 15 years ago, it was get a PR agency. How do we do that brand awareness? Take a page in a magazine or the newspaper or a billboard, which is not cheap. Now digitally, the costs are a lot lower than what they used to be.
And with COVID, access to talent is really easy. Gig economy is picking up. You can access the best designers and consultants anywhere in the world for very competitive prices. We have a few more questions, Tahir, if you don't mind, I'll take more of your time. There's a question from Darius Alexander. He said, what do you think is required for sovereign funds and prominent investors in the region to direct more capital to the UAE tech rather than tech firms in the US and Asia?
Look, I think it all comes down to opportunity, and we can't say that sovereign wealth funds or the large institutional investors are only looking at US and Asia. They are looking at UAE as well. They are looking at opportunities in the UAE. It's just a matter of look at the markets. The US and Asian markets are much bigger. There's a lot more opportunity compared to what would the size of the market here. So we always look at numbers. How much has XYZ invested in US firms or in Asian firms or European firms compared to how much have they invested locally? It's a numbers game, right? The more opportunities there are in certain regions, the more investment will go in there. So it's not the fact that there is very little or there's not enough. I think there is. It's just a matter of more opportunities need to be created here in UAE for investors to invest in.
And to add on to that, I am aware that the DIFC is also building new regulation to support the establishment of funds and wealth management offices from the DIFC at realistic costs, and also taking in mind that talent can operate from anywhere in the world today. They don't need to physically relocate to be in those countries. So the whole business model of really creating, structuring, and regulating products is moving away from where physically that business is to where eventually it's creating the impact. Thank you so much, Tahir, for your time. Really enjoyed the conversation. I would like to thank our audience for their time and participation. And I would like to mention that the DIFC FinTech Hive Investor Day is scheduled for the 30th of November. Please register and join us, and have a look at the 17 companies that have been part of the program and listen to their achievements, accomplishments, and proof of concepts that they were able to achieve with the partners from the financial services sector that has been actively engaged in our program. I look forward to meeting you all then. Tahir, will stay in touch and let me know if one of my FinTech Hive companies reaches out to you, because they will have all my support.
Definitely will do. Thank you so much, Raja. It's been a pleasure.
Thank you.
Thank you, everyone.